Hey guys, welcome to the channel. It's Hamza, and in today's video, I'm gonna talk about why you guys need to apply for a hard money loan if you guys are flipping real estate or holding it in the short term. Now, there's a lot of stigma around hard money loans, and every time I bring it up, people tend to get upset. And the reason they get upset is because of the interest rates. Everybody thinks that hard money loans are 20% interest annualized, and I'm here to tell you that is just not the case. I've actually seen hard money loans go for as low as 5% a year. But of course, you might not get that interest on your first deal, which is totally okay. I'm here to tell you guys how to maximize and use hard money loans to your benefit so that you don't have to come out with too much money out of your pocket when flipping a home or investing in a home short term. Now, of course, hard money loans have come a long way since they initially launched a bunch of years ago. And you have to understand that you can now get hard money loans for construction deals, for commercial deals, and for your single family home fix and flips. But it's very important you understand the advantages of a hard money loan before we talk about some of the disadvantages. But before I get into the video, please remember to smash that like button for the YouTube algorithm. YouTube loves you guys and loves me a little more when you guys smash that like button. So go ahead, do it right now. Okay, now that that's out of the way, let's talk a little bit more about hard money lending, hard money loans, and when you guys should be using hard money. So a few cases where I personally have used hard money in the past were, I had a deal that I absolutely had to close on, and the deadline to close on that deal was in 15 days. There was no way I was gonna get agency debt, meaning a bank, to give me money in 15 days. And also, I didn't want to put any of my money in that deal. So guess what I did? I reached out to a hard money lender here in Houston who I have worked with multiple times in the past, and they were able to give me the money and secure the loan in just 10 days. So one of the big advantages here, and one of the big lessons that I learned, is hard money loans can be very advantageous if you're getting a great deal and you need to close on the property quickly. You can always take that hard money loan and then convert it into a more conventional or more traditional type of loan later on down the line. And you'll only be liable for those interest payments for the amount of time that you had the hard money loan for. And in my case, this was extremely advantageous because I got a 50% discount on that deal just for closing it in 10 days. So the first lesson I learned is that if time is of the essence, go ahead and try to close your deal with a hard money loan. Worry about refinancing it into a conventional loan at a later time. And that's how you make the big bucks. The second time that I ended up using a hard money loan is when I did not have 20% down to put on the property. Now, this was a large commercial deal, and at the time I didn't have 20% down. And since I had worked with my lender in the past, I was able to secure that deal for just 10% down. After I secured the deal, the hard money lender actually gave me another loan just to be able to rehab it. And so I only had to come up with a rehabbing budget, but I didn't actually have to come up with the money. Once again, this is only for deals that you think you can get out of in a short amount of time. And I was lucky enough to get out of that deal in less than 4 months. And it worked out really good for me. I was really glad that I was able to make the deal happen, get the loan, and even sell the property at a 30% profit in just 4 months. I would go as far as saying that if you have a good relationship with your lender, a hard money lender can actually give you the entire amount for the property. And this is because your loan is actually guaranteed by the property itself, which means I have seen cases and instances in which people put zero money down and were able to secure a loan to fix and flip a property and then sell it for a profit. Think about it. How crazy is that? They came up with no money, just a relationship that they had built over time, were able to secure a loan, flip the property, and make a $30,000 to $50,000 profit. Now, obviously, this does take time and effort, but for those of you who are really interested in flipping, all I'm trying to say is that you don't need to shy away from hard money. These loans have become much less aggressive over the past few years and can be had at a reasonable interest rate. And I would say anywhere between 5 to 9% for these type of loans is reasonable. Another reason I like hard money loans is that it's minimal paperwork. Yes, you have to have a good credit credit score, a 640 and above helps, but you don't need to go through the long documentation process that you would in a bank loan or any other type of conventional loan. You want to focus on building a relationship with a reputable hard money lender in your area. And no matter where you are in the United States, there are plenty of hard money lenders out there for you. So far, we talked about a few reasons why hard money lenders are really good, such as speed, ease of closing, minimum document requirements, and less than 20% down in certain cases. But I haven't talked about the biggest reason why I actually like hard money lenders. So the way the process works is fairly simple. You find the deal, you go to your hard money lender and you tell them, hey lender, I need a loan. And this lender is gonna have an entire team that's gonna do due diligence on that property and on every other property around it, which means they're gonna run comps of the entire area that you're investing in. And when you get an approval from a hard money lender, that means you have a good deal in your hands. So think about it. You're gonna have this entire team doing due diligence on the property that you brought to them and telling you, yes, this is a great property. This will confirm any doubts that you had in this property. And this, in my opinion, is one of the biggest factors that attracts me to hard money lending. The fact that I can go and talk to my hard money lender and tell them to do due diligence on my property just to make sure that I'm getting a good deal, also confirming the profits that I'll make on the back end. And that's why I think having a hard money lender in your team is vital. Now, in my opinion, the only real downside of getting a hard money loan is the high interest rates. And you have to be very careful when you sign up for a hard money loan, and the interest rate should vary from 5 to 8%. Now, a few things to consider when you're getting your hard money loan are origination fees and interest rates. It's very important that you do the math and find out where you are gonna get the best deal. But let me give you a few guidelines. You have two types of hard money loans, one in which the origination fee is high and the interest rate is low, and the other where the origination fee is low and the interest rate is high. You have to know exactly how to use hard money in each situation. So for example, if you have a property that you think you can flip out of in less than 30 days, you want to take the loan that has the low origination fee and high interest rate. And because you're only going to be in the property for an extremely short amount of time, the interest rate doesn't really matter. You will end up saving big dollar on your lower origination fee. Now, on the other hand, if you have a project that you think is gonna take 9 to 12 months to complete, I always suggest that you pay a high origination fee, but you get that low interest rate. And the reason for this is, if you feel like this rehab is gonna take longer than your general rehabs, there may be some unanticipated delays that may lengthen the time of your loan and you flipping this deal. And for that reason, having a lower interest rate is always best for you. So to recap really quickly, if your project is gonna be complete in a very short amount of time, you want to pay a low origination fee and a higher interest rate. The math will always work out to your benefit. And if you're in a deal that you anticipate to be in long term, always pay the higher origination fee and the lower interest rate. This way, you're in the safe even if that loan gets extended for a little bit. And of course, the most important thing to realize is that hard money lending is only good short term. You need to make a profit and either get out of that deal or refinance out of a hard money loan into a conventional loan in less than 1 year. With all that being said, I really believe that hard money loans or creative financing is here to stay long term, as a lot of you who are just starting out in real estate may not qualify for other types of loans. And that's it for me this video. I'll see you guys next video.